necessary.
Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today we'll go through our market update, the update to earnings trades, and then we got Joe's analysis to close it up. So feel free to ask questions throughout. Okay, still in state 2 for SPX, NASDAQ, Russell, Dow. Green pie wise, so last week we were 26. So now we're at 33, 34. So we're not oversold anymore. 30 is kind of that level. So we're kind of back in. We've had some nice movement from 2 back to 1. But, market's kind of looked over past few days. Sector wise, pretty close, the same. We had energy, staples, and utilities still in 1. Real estate was 4 last week, still in 4, and the rest are in 2. So kind of mirroring everything in the market. So let's take a look at the market pulse here. The last week, pretty much I'll pull up the 2s. So, from here, the 19th, 2s pretty much went to 1, and then, the past yesterday is kind of ugly. Leading up to the Fed day here, but, we're definitely not getting the 4s. That's pretty much flatlined from here. Like the 18th, pretty much done nothing. So, so far it's just proven to be a shallow pullback. And we'll find out probably in the next few days. We got the Fed today. We got, the employment number on Friday. And some more big earnings. I think Apple's tomorrow. So it's been another big earnings week. So I think, at the end of all that, we'll kind of know which way things are heading. And always, keep your eye out for that 10-year, which way that's going. But, not really getting any lows or highs here. So market trying to find its way. We had that one spike on the lows, and then since then, pretty much very minimal activity, kind of dead period here. So, just keep your eye on that and see if it breaks one way or the other. So we're in pretty balanced, 1s and 8s, so 29 versus 24. So we can go either way from here. And, hard to say which way we're going to break. My big thing is watching that 10-year. 10-year, we're at like 4.65. Let me so above, I think 4.5 is kind of bad. The higher we get, the worse I think it'll be. So this thing spikes, look out below. If we drop down below, I'd expect this to resume higher. So I think kind of watching that is one of the big things. We are getting a nice drop from crude today, so that could help some. But okay, let's see, bullish, bearish. All right, so we had that big jump up, 75. So drop back down to 60s, and we'll have to see if we cross below. Like back here, did very similar thing. Drop down to like low 60s, and then kind of mashed around. Then when and things got ugly. So if we can get the bullish states higher, where it's starting to act like this, where it's going to cross, it's a good thing. But we don't like it to see, putting on the brakes right here at 60, kind of like it did here, previously. So this one's a little higher, but that's kind of what I see there. So SPX, state 2, obviously at the target. The key thing I think is we've been watching. Let me get the little tool out here. Mouse is acting slow, sorry. That 5,000 level, we had one day below that and, kind of tested it here. One close below it here. It hit the target and bounced off. And so, ramped up, came up, and now we're, back below the entry price. So entry price is always kind of important, depending where you are. Up here, it'll be, this is like a kind of key support and resistance line. So, once we're below it, it turned back into resistance. So that's kind of what I'm looking. Really, we've been in here longer than average, but like I said last week, these can last a while. I've seen them go like 40 days in state two, and like the average is like 10 days. So, if the market can't find direction, it's just basically chopping around. So we had a nice pullback, at this point, it's just kind of like consolidation down here. And kind of waiting for which way it's going to break. Yeah. So on the chart for SPX, I think even more telling. Let me draw here. There's your 5,000. So we had that one close below, get up, and now, like the 20 was our support run on the way up. So, that and the 50 are pretty much right on top of each other, but you can see, like, I'll annotate here. See, this is turning into kind of resistance here. It had to pop up above and then, quickly goes below. So this kind of like the modeling. I mean, the bottom of this range of 5,000. So we're kind of stuck in between these two to see which way it's going to break. In the next next week or so, I would guess things will move. Maybe by Friday. Hard to say exactly, but that's kind of what I'm looking at. Those kind of key levels. So the EMAs are, the 50 is 5076, and the bottom range 5,000. 200 days way down there. Don't worry about that right now. But getting above those, staying above them. Yeah, it tried and then just got crushed. So I think we're down a little. Yeah, so we're getting near that 5,000 again. So that's kind of what I'd be looking at on the downside, and then staying above these moving averages to the upside. So it's a pretty tight range overall. That we can look for breakouts, but yeah, it's a little concerning. I mean, the support off the 5,000 was great. This trouble right here is not really a super bullish sign.
Hey, Josh,
Yep.
does looking at the Fibonacci now add anything, or is it pretty much the same as the 50-20 day?
The retracements, I'm sure
Yes.
those are somewhat different. Joe, do you know those offhand? I haven't
Yeah,
run.
SPX. I got SPX at 48.20.
Yeah.
So a long ways away. That's the 3/8 retracement.
Yeah.
So yeah, long way away in the SPX.
Mhm.
Russell's the only index where we've gotten to a 3/8 retracement at 1945. And both NASDAQ and Dow are a ways off as well.
Yeah.
Okay. So
that would be like things going into state four, like the big group rolling 2 to 4 to get down there, I would think. So,
okay.
Yeah, that was the first significant retracement, right, Joe? I think we actually hit the first retracement on the fib chart there, but it wasn't the first significant one because I think it's right around where we are now is the first one. But it's not one of the two significant ones, so I think for sure.
Yeah, the ones that I've always thought were kind of the most important were the the 3/8 retracement, the 50%, and then the 6/185 retracement. There is that 0.236, which honestly I've never really used, but yes, so we have achieved that.
Mhm. Okay. Well, yeah, tight range here, and we're gonna see which way it breaks out. I think a lot's gonna be Fed, obviously earnings, then employment and, yeah, 10-year. So, okay, that's it for SPX. Russell, similar story, but, hit target 3. So now we're back to, having problems here. We had basically one day above the entry price 2000. Obviously, I haven't got near the bottom of the range. It's the top is 2119, 2100 to 19. So mid range there, but that entry price becoming quite a problem. Obviously, been in longer than a week longer than normal. But so you can kind of watch this to the upside. And the moving averages, or the 50 is also a problem with Russell that I'll show you. But so to the upside here, and then obviously downside. We got the low so far in this state, that's 1931. So, and then below that's 19. So I'll pull up the let me get rid of those scribbles. All right. That's 21. It's a real problem. There we go, 19. So just like the other one, SPX, gets up, that's the 50, that's a problem. So this one, like Joe said, has met the 3/8. You got the 200 basically down here at the bottom of the range, the 19, 21 is obviously top range. So, had to swoop down, didn't really test 19 or, the 200, but, tried to get back above the 50, which, was support, strong support during the last rally, from here on. So, I'd be, just like SPX first test was fail. So, there's your upside, resistance right in the 2000 range. Let me see what it's 2014. So similar, a little wider range than SPX, because SPX, had that tight, 75-point range, but here, little wider between the bottom and top. So, but similar story. And we'll just have to see like how the market reacts. This one's the most rate sensitive. I'll pull up the 10-year while we're talking about it. This has kind of been sticky at this 4 or 5 kind of range, since basically right here, mid-April. It's kind of chopping back and forth right around this 465 range. So just keep your eye. If this thing goes up, it's not good for the market. I've shown you that chart many times. So let's talk Fed and the rates. So today, obviously, have called, nothing going on there. So we have seen some movement. So July, that moved quite a bit. 20% to no cut, 20% added. So 3/4 now saying no cut in July, and then similar kind of movement in September. So this was, the average was 46, so it's kind of moved up to no cut. So what this is telling us now is it kind of makes sense, no cut to the election. This is your first possible cut. It's kind of coin toss, and then end of years, one cut is kind of the call right now. It's moved so much. That's just inflation being a little, as they say, stickier. Yeah. I know the rents are a big component and those have not come down. And definitely, I don't think how many people feel like grocery prices have come down at all. So, if we get some retreat in this, oil, it's been hanging up above 80 for a while. So we can get some pullback there to help the consumer, but that's kind of where we're at. Pretty big moves though. Since we've been tracking this, we're, I think this was kind of average when we first pulled this up, sometime last year. So big moves. So no expectation, and Joe had talked, it's going to get real political starting soon, and elections November. So it'd be tough to do that cut between now and then, and not look political. On the other kind of news, I keep my eyes on the banks, and there was a bank taken over last Friday. Republic First. Joe knows the bank. I think it's up there. It's a small bank, so. But always keep my eye on banking problems. So hopefully it's not the start of anything else and just like a one-off. But Fed balance sheet, nothing can do it. I mean, it barely moved. So almost this is COVID, the start. So right around 7. Pre-COVID, and it's like. I don't even think about it. Maybe in 2030, get down there. I think that was it. I did see something interesting. So this is delinquency rates, multifamily housing from Freddie Mac. So it's just surprising to see this kind of spike. This is basically, the financial crisis, and we saw the spike after, right? So, but I mean, that's a pretty significant level. But saw it, thought it was worth it, worth pointing out. So keep our eye on, the credit card and, the balances and delinquencies and all that stuff too. Just kind of give us a heads up if something's coming. So. All right, that was it for the market overall. I saw Bitcoin taking a beating, but I think that's it. Any comments, questions?
Josh, Robert here.
Yeah, hey, Robert.
Yeah, you just mentioned Bitcoin. And back when we were talking about Fibonacci retracements, Bitcoin actually hit a 50% retracement early this morning
Oh yeah.
from its all-time high.
Yeah, I don't track it that close. I just kind of like casually check on
Yeah,
it.
just kind of a fun fact.
Hey,
Yeah, those
Robert, you mentioned,
Fibonacci numbers are there's something to those, right? Go ahead,
Yeah.
Joe.
Robert, just a question to Robert about the all-time high. Was that all-time high, Robert? Was that recently, or was that a ways back where we got to like 70 grand?
Pretty recent.
Well, it topped out at 72 just before the halving, which was
Okay.
April 18th.
So it did get to a new all-time high. Gotcha.
Right.
Yeah, that
Yeah, it
was
was
after
back in April.
after the ETFs came on board, and the halving was, I think hyped as a what do they call it? A catalyst for more Bitcoin, bulls. And a kind of a comment on the SPX there, and the 5,000 level. We kind of, I think we suspected that it's sort of being sticky there and on the way
Yeah.
up, and it kind of blew through, and now it's kind of gravity's kind of pulling it right back to there.
Right.
So that's not really a surprise, and with the Fed, interest rate, nothing's, I don't think we're gonna see anything major ups or downs for months on the FOMC thought process because it's, if they make a change before the election, then they're gonna be perceived as being political. If they at least wait till the election, then they
Mhm.
can say, unless they have a reason that they have to raise rates, because that's been more of the, say, concern lately, I think, than reducing rates. They'd be much better off. They have a better chance of saving as much face as they can. They'll wait till after the election. So I wouldn't be surprised to see December being the first. In we'll see what Powell says in a minute, but I doubt he'll say much about going up or going down. He'll be talking about staying the course of seeing how their past rate hikes are still in work. We'll see. We'll see in a few minutes. Anyway, don't ask. It fails
Yeah.
to prognosticate. Just listen to what the Fed says. We'll
Right,
know.
right. Yeah, they've been following through on what they've said they're going to do. Yeah, I've been monitoring all the inflation data. I mean, even some that are like it's like, oh, it's 2.8 instead of expected 2.6. I'm like, okay, like that doesn't warrant another hike, with rates that high. So unless there's like significant, I wouldn't expect them to do anything. Even if it like creeps up. I mean, if we get spikes, then yeah, but if it just creeps up by like 0.1 or something, like that's not going to do anything. Like,
I'm with you. Yeah, I'm with you. And I sort of sense with we've had earnings now on some of the top big stocks, big tech and all, and since some of the air coming out of the AI hype balloon a little bit is kind of what I feel. And I've been watching a lot of the stocks that are in that perceived sector or perceived group of AI. Well,
yeah,
it's still a hard thing to define, so I don't know how anybody really trades it.
yeah. I mean, what do we see for AI? It's like a chat. It's like a online, kind
Yeah,
of
that
like
generative,
yeah.
you can get a story with just a small
Like, is
cue.
everyone building one of
Yeah,
those? I mean, like where's the real, like, you know,
yeah, the
uh,
ones that are going to benefit are the cloud guys that are already benefiting from being in the cloud, right?
yeah,
So Microsoft was up, Google was up. We'll see what Apple does, but Apple doesn't really have an AI story, if you ask me. They report later this week too. AMD didn't do so well today.
right,
SMCI was down today, but
yeah,
a lot of those are just down because their valuations were too high. I don't say that they're a bad business case, they're just valuations were too high too fast. That's what we're seeing, I think. We're seeing that. That'll be keeping stocks kind of like in a choppy or in trading range, I think, for a while. That's kind of what I perceive for the next quarter. Things are going to be in a
mm,
trading range. We'll see. We'll see. It's my guess.
yeah, definitely a stock pickers market. I mean, these guys are getting killed on earnings, and then other ones
Absolutely.
are doing great. So yeah, AMD's down almost 10. Hmm. I still remember when this was like a $2, $3 stock. Anyway, thanks, Dave. Okay. Anyone else? Questions, comments? Okay, we'll roll through the earnings. Q1. So, still, we closed out quite a few. We got 3 open. This one, MGM's loser, pretty big loser. So we had, sorry, let me move this. Yeah, it's kind of the typical Q1 right now, at least for the past 2 years, previous to quarter 1. So overall down, the closed trades were, you know, 4 wins, 3 losses, and take a couple of big ones. So that really has hampered things. So this one's going to be another big loser. So got two more active, and overall not a good start for the bullish pre-runners. Bearish, I think we had one that closed out profit. So that's only one there. And then got bullish runners. Got four open, kind of half, two closed, one ACN, this one was bad. And Goldman was a profitable, so overall not a good quarter for the bullish trades so far. All right. Vol rise. So we have one open, two closed. Disney, so that the six. This one's been pretty consistent, it's been on the sheet for a long time. Then the other two, hit the profit target here, and then this one just closed out right before for a modest profit, but that one's up. So bullish are dragging us. No bearish runners. And then non-movers. So we got two. Pfizer was yesterday, then NXPI. That was on the 29th. So if we look at this one, our mid price 24.75. I track these real close. So we're pretty much right on.
hit today.
What's that?
NXPI hit the profit target intraday. I think it was yesterday.
Yeah. Well, definitely it's there today. So like we had to spike up to 260. This damn thing gets in the way. So, the high end was 265 on the call. Then, obviously, maybe you hit it down here. And then, it wasn't that close because it climbed back up, but I'm sure it'll be today if it closes around.
Yeah, I think it was only open a day.
Yeah.
It intraday. Hey, I have a question on these non-movers.
Yeah.
The non-movers, and I haven't seen a ball crush lately, but that iron butterfly has the most interesting risk reward profile.
Oh, yeah.
And I've been trying to think of ways where there can be more other than around earnings,
Right.
iron butterflies. And I wonder if you guys have any suggestions on what could be back tested for that. One of the things I'm looking at that I have to do manually because you don't have a squeeze indicator in Delphian. Are you familiar with the squeeze?
What kind of squeeze? Like a Bollinger Band squeeze, or?
Yeah, when the Bollinger Bands are narrower than the Keltner channels. And
yeah, we don't have that. I mean, we have both of them, but we don't have it overlaid, like the different.
Right. And right now I'm just kind of manually testing. Like, for example, I went back to last year just on Think or Swim. I have a squeeze technical indicator. And I went back to last year and looked at the day the squeeze started, put it into the virtual portfolio in Delphian, and entered on those days a iron butterfly for a week out.
Mm-hmm.
And just on DIA, it was 6 and 2. And I used the same, 15% profit target.
Right.
And I didn't have a stop loss. I just closed the day before expiration.
Mm-hmm.
And so I'm just wondering if now that's only 8 trades, but I'm just wondering if it's a really good risk reward. If there's, has there been any thought on a way to test that on a broader scale in Delphian?
I mean, this, I would stay away from kind of where big moves can happen. But But, this would be kind of like an ideal thing. This kind of movement where you enter state two, it drops and then comes back, then
Right.
like a week or two. I mean, that's kind of the action you're looking for. You're not going to find too much, where it's just going, sideways for like a week, right? You got to plan for some like swing back and forth. So that would just be my initial thought is, like a two, go down, hit the target, come back to, the entry price and, you close out there, you do a couple weeks
Right.
expiration type thing. That would be my thought. And, we could look at it in 7 too, but, I think this would be the better one. Just,
State two.
yeah, that's what I would think, but
Mhm.
I don't know about the other states. Like here's a 7 here, right?
Yeah, that
Yeah,
went
it's just kinda
sideways
like,
for a good clip.
yeah. I mean, that's what you want, right? For this
Right.
trade. Sideways, like for, or at least like within a week, it gets back to where it was. If it went up, it came back down. So, those would be the two I'd kind of look for. Like this 5, it's some, you can get a big jump. Like you don't want that. Even, this 8.
There's another right in the middle above 28 August, the S2, the state two. Nice sideways week.
Yeah, and then came back up.
But if you got in there at the beginning of state two,
Mm-hmm.
and remember, I'm only going a week out. So that would have hit a 15% target.
This would have, huh? Yeah, I kind of like the 2 weeks. It's just like, it just personal. It gives you more time. In case it drops bad. Yeah, I guess. Yeah, it's a preference thing, but because I mean, even if you're here and like, you would have made more money on the 1 week, but 2 week, you have.
If it doesn't move, these non-movers, they decay fast. In
Mm-hmm.
other words, like that S7, if you let's say it happened today, and you would place the expiration on May 10th, not Friday the 3rd, but the 10th.
Mm-hmm.
This thing will decay by Friday to give you a 15% profit with that kind of price action.
Yeah.
In other words, that big green bar there, you never get there because unless you're going for 100% profit.
Yeah. Well, that's.
But if you're going like we do in the earnings, 15% profit, with
Mhm.
this sideways action on the 7, you'll get there in 2-3 days.
Yeah.
So
Yeah, I
anyway,
mean,
just
that's where
just
I'd
food for
look,
thought. If there's some
Mhm.
way, I'll look at the state 2 and state 7s, but if there's some way to test for this, those are really interesting trades. It sure be nice to find more of them.
Yeah, you can't beat the risk reward,
Yeah. Anyway, just
Yeah.
food for thought.
Yeah, no, it's great. And we'll put some thought into how we can, find better trades like these.
Yeah, like NXP, I think it hit in one trading day.
Mm-hmm.
When do we place it? Yeah, it hit yesterday, one trading day. So if this
Yeah.
thing goes sideways just for a day or two, I mean, you'll hit the 15% really fast.
Right. Well, I think, it's also a factor of ones that have decent IB, like you do. Like this one, Pfizer's not going to be like a huge drop or anything. This one, obviously, it's all trade-offs, right? So ones that move more, that don't move, will hit it faster, but ones that don't move, will take longer. Pfizer's not like a big mover typically, but so anyway, yeah, it's great, great idea. Thanks, Sadir.
You're welcome.
Yeah, Josh, we can have, some fun talking about that. And, you know, maybe those price targets come into play with some of this as well in terms of developing trades.
Right, right. Yeah, definitely. Okay, anyone else? Questions?
I got a question. This is Dave. I got a question, sort of just not to the group here, just kind of a subjective question. But as we are where we are now with the pandemic behind us, if you will, say mostly behind us, so we're still feeling the pains from our reactions to the pandemic. But my question to the group here is, do you think we're at the place now where we can call a new normal, or is it still the new after pandemic normal still pending for a while? Just my question. I'm curious to what other people think about that.
Dave, this is Joe. I think the new normal will continue to evolve. I think what the damn pandemic did was give you know, every part of life, corporate, human, what have you, excuses to lower standards. And I think, you know, in my day-to-day, I see just standards lowered in so many different parts of life. So I wish we were past it, but I think it's a built-in excuse that is just going to continue going forward and give us these kind of up and down experiences, both, you know, investing and then just in our day-to-day life.
Okay, thanks. Anybody else?
Joe,
it's not a right or wrong question. It's just kind of like what you think question.
yeah, Joe, Dan here. I agree with what you just said. I think the standards are becoming lower and lower, and I think that's part of the grand design by the powers that be. And you know, I don't. It's crazy, you know, to see what's going on today, and I think, you know, it's impacting everything. I think even the market. I think there's so much manipulation in the market. You know, but I don't see an end for quite a long time. You know, and not in my lifetime. I don't think I'll see anything better. I think the best days have been behind us at this point, you know. So I just feel like there's going to be a lot of turmoil. This country lacks leadership, and the rest of the world is also, you know, in the same boat. Everything I look at, from food supplies, not just supply chain, but food supplies, the quality of food, you know, the carbon footprint crap, global warming. There's so many excuses out there that are just shackling everybody, businesses and everything. You know, it's sick. It really is.
I agree with you, Dan. And then, you know, you pile on top of the pandemic, you pile on this social media stuff, and that is just, you know, it's a bad combination.
Oh yeah, yeah. You know, and the the open borders, and you know the riots that are going on everywhere. You know, it's ridiculous. You know, it's not the country that I ever thought that this would turn into. You know, we've got people that are in this country chanting death to the U.S. You know, they should be immediately exported. You know, you don't like it, get out. You know. But yeah, I don't know. But even our foreign policy is terrible with what's going on. You know, that's my view.
Well, it's a dynamic world, and one of the reasons I asked that is my personal feeling is that I look at certain things as sort of somewhat indicators of the overall, like the VIX right now is sort of getting closer back to 15-ish, where it kind of normally is. And all during the 2 years we were shut off and shut down and all, it was like near 20 for like almost 2 years totally. So it's kind of getting back to sort of normalized. And if you think I look at it this way, like I view the pandemic was the huge disruption, like somebody smashing a hammer into a bell. And if you think about a sine wave, that the amplitude, the high and the low trough kind of diminish. I feel like we're diminishing somewhat, but I like both you guys both said, I think we got a ways to go. But it does feel like it's not getting worse. It's getting a little bit better, in my opinion. That's my opinion anyway, to the question I asked for myself. Anybody else? Thanks for your replies. I appreciate all the points of view. I think it's an interesting dilemma that we have to like deal with as investors here. So it's like I think we can make money whether the stocks are going up or down or sideways, but it's challenging when volatility is increasing. If volatility is sort of like subsiding a little bit, it might get a little bit easier from here on out. That's my hope anyway. So I'm hopeful. So that's my point. I'm
Well,
curious what Sadir might think about that. I like his thinking a lot. Sadir, do you have a chime in on that? I'd like to hear what you say.
Repeat your question a little bit because I'm not sure the gist of it.
The question?
Yeah,
What do you think?
do you
Yeah,
think it's
go
a
ahead.
new
Go ahead.
normal or?
I'm curious to see what you have to say. Go ahead, please.
Well, I think your question was that do we have a new normal? Is that correct?
Or we're getting closer to one. Yeah, or getting closer to one. I think that void is we are not at a new normal, but are we getting closer to one or are we still as far away as we were in 2022, let's say?
There seems to be a need for things to stop changing and get to a new normal. But because of technology and remote work and delivery services, things just change. And I think a lot of things are changing, and some people think that means the world is going to hell in a handbasket. I, for one, see opportunity in change, and change is just accelerating. A lot of things because of COVID, like remote work, everything can be delivered, things like that. The world's just changing. Either you make money with it or go with it, or you can sit on the porch and whine about it, but it's not going to stop changing.
Here's another specific example of something that caused me to think about the question. When the pandemic was here, we were shut in, right? So nobody was going anywhere. Then there was going to be a sort of a question where, are we going to have remote work? Is that going to be a short-term thing or a lasting thing? Now, to me, it feels like work from home or remote working is not going to be transitory. It's going to be more like the new normal. Like now is, I think, what the work from home or remote work, the percentage of people working remotely, I think we're getting close to what that's going to be in the long term. And it's far different than what we had pre-pandemic or right during the pandemic. So
Yeah, I have close friends, including my sister and a couple of friends who are battling with their bosses because they've been working successfully remote. Now the bosses want them to come in 3 days a week. And these are all different industries, different businesses. And they're like, well, why? When I come to the office, nobody that I work with is in the office at the same time. I'm doing fine from home. I think the employers are fighting a losing battle. That's remote work, as much as the work allows, is the new normal. And I think some companies are not comfortable with that change. They don't want to change how they manage people, but it's over. That's what people want. They want to work remote when it makes sense. And then, that gives the rise of all these delivery services. I often wondered if all these people are working remote, why there's still a traffic jam when I'm trying to go someplace. And what I think is all those people working remote who are not commuting have been replaced by delivery drivers delivering things to people working at home. Because you can get delivery from Home Depot, you can get delivery from every grocery store, you can get delivery from pizza, Chinese food, Walmart, Kroger, anything, Uber Eats. So they're all the roads are being delivered, people delivering them. And that's just the new normal.
Yeah, I agree with you. I live between 75 and 275 and between Fowler and Fletcher. And I thought, well, if there's more people from working from home, that'll be great. There'll be less people on the road. But totally wrong on that. There's bigger traffic tie-ups in that area right around here than there ever was. So
It's not.
I
The
was
traffic
wrong.
is just as bad, if not worse. And
It's worse.
I don't have a study to back it up, but my theory is that all those remote workers that are off the road were replaced by delivery drivers.
Okay, well, thanks everybody. I appreciate your comments there.
Dave, Robert here.
Yeah, go.
Yeah, my question would be, do you see attendance at meetups and conventions? Are we back to pre-pandemic levels, or are we still where are we at there, Dave?
I'd say we're nowhere near close yet. I can cite like things that were commercial things that weren't like subjective or things that I was involved in personally, like the Money Show. The Money Show that has come back to like appearing in Orlando, but it's way different. And there's night and day. There's the attendance is like, I would say, 20% of what it used to be before the pandemic, even though they're having it in like in the open now and in conference rooms and stuff. So my personal view of that is we're not near as where we were pre-pandemic, and that's just my view on that. So my answer to your question.
Thank you.
All right, well, good discussion. For bringing it up, Dave. We do have to give Joe some time here, right, Joe? You ready?
Oh, we don't have to, but I got a fair number of charts. I'll maybe just go through them quick. I know we have PAL 2 o'clock, so I will just start with what I think is kind of interesting. Just the AAII, bullish, bearish, and neutral. Everybody's the same. I think that is really a fabulous snapshot of kind of the opinion of the market here. I think it's still super easy to make a bearish case, but I just thought it was kind of interesting. We'll get another one of these tomorrow. And again, I don't view the bullish and bearish numbers by themselves. To me, it's the differential, and it doesn't happen very often between the number of bulls versus bears. But what I just found interesting was the symmetry in the three opinions here. So that's one thing. Josh has always did a nice job going through, a bunch of different levels. I was going to start with TLT, but with the conversation of SPX, I just pulled up the chart that Dave was referring to. And so that, coming out of the October lows, that first retracement we talked about, the 236, which if we can hold that, and again, I don't typically use that, but it's just a sign of strength. If you can hold that retracement, not even get to a 3/8 retracement, it obviously speaks to strength in the overall market. But I do want to start with TLT because, as Josh has been saying for many, many weeks and months, it is about the bond market here, and TLT is in state 8, basically beyond, and it was a good state 8 signal for sure. But we are beyond that average period now. The move is beyond the average move. So, it always bears watching, but I think it especially bears watching now. And on top of that, then the whole idea of, we've talked about XLC, NDX, even, and XLK being, the first indexes to go into state 1 in early November. So we've talked about them as leadership. And then I went back and I looked at what's topped first. over the last month and a half. And so, I pulled up the semis, near and dear to Dave's heart. Here's SMH, Semiconductor Index, okay? You see that monster red candle. Let's see. There's the SOX Index, same thing, Mark, big red candle, all right? And NDX, basically looking at the top, it's not as vivid because you're talking about 100 stocks, in NDX, but that was a big red candle in early March. So TLT, interestingly, I'm going to go to March 8th. You had a little bit of a move. March 8th, you really didn't have much, in TLT in March 8th. But again, the semis, which SMH, the SOX Index, NDX, XLK, they were the first to go into state ones in early November. All right. And that is one big red candle on March 8th. We know what happened on March 8th? March 8th was the unemployment number. And that's why I think, so let me back up here a little bit. So there's XLK, and on March 8th, again, it wasn't as big a deal for sure in XLK, but when we're talking XLK, we are talking essentially Microsoft and Apple. Okay, they make up almost 45% of the index. When we talk XLC, we're talking Google and Meta, and that's almost 50% of the index. NDX, of course, is going to be more equal weighted, Microsoft being the top about 9%. But, I just think they were leaders, and especially the semis, and it was that unemployment release on Friday, March 8th, where, and the number was higher, they moved. And so I just think that it kind of speaks to how important this Friday's number is. What has changed, the expectations, if we go back to February, March, the expectations for unemployment were really in that 170, 190 range, I believe. They have kind of been going up. So I think this Friday's number, they're looking for around 255, somewhere in that neck of the woods. But so I just think we're going to get a darn good sense of whether, what direction the market's going to go by Friday's close is what I'm thinking. XLK, I wanted to pull that up and again, just give some perspectives coming out of the monster lows. We had the October 22 lows, and then we had the October, early November 2023 lows. So I just think, the charts, say a lot, and, you can see XLK, and again, XLK, Microsoft and Apple, by and large, that's almost 45% of the index. Then you get into the Broadcom, the NVIDIAs, they're all under 5%. So it's almost a proxy for Microsoft and Apple. But there is XLK, and to me, the charts right now, essentially most of the lows were April 19th. Here we are, April 19 here. Whatever you're trading, are we trading to new lows, or are we holding the April 19 lows? I think it's kind of that simple. Microsoft, I just wanted to go back. So, Sudhir is frequently bringing up some interesting ideas in terms of, recently consecutive days, moving to state 2 and that kind of stuff. And then just the length of time that I like to talk about with, some of the various states. And I did pull up Microsoft, okay? I mean, the more I look at Microsoft, and I'm probably an idiot for not realizing this before, the way Microsoft goes, the way the market's going. I mean, the thing is just, incredible. And there have been, let's see, the Microsoft, we just came off of a long state one in Microsoft, okay? Over 100 days, it was 130 days maybe. I think it was 130 days. We rolled over, yeah, it was around the 17th of April. I think we were 130 days. And let's see, so here are the longest state one runs in Microsoft. And, you know, what really jumped out at me was you got almost a 2-year, it's not officially 2 straight years, but essentially from July of 16 to April of 8 or to October of 18, Microsoft was in state one. I mean, it went into state two, I think 2 or 3 times that period of time for a total of 25 days. But, and that's why I go back to the Microsoft chart, going back to, well, actually, sorry, that was another chart. Here it is, you know, going back to when that super long state one started, and this is condensed, obviously, because the chart's going back to 2016, but really from 2016 to, you know, towards the end of 2018, Microsoft's in a state one. And I just, you know, we had a little bit of a pullback, you know, with COVID, another monster run. I just think it's a stock I need to pay more attention to. And again, the longer term charts are just really to show the magnitude of some of these runs. And, you know, this thing's a company this size, you know, more than doubled, you know, in the last year and a half is just pretty amazing. So that's Microsoft again, you know, all part of the XLK leadership. There it is, a little shorter term. And again, we had this state one run, which is 130 days, one of the longest runs we've ever had in Microsoft. So an important chart to keep an eye on. Apple, we've been talking about, Dave's been all over it. You know, it's in a quagmire. I think it's pretty amazing that XLK has held up as well as it has, you know, with Apple just, you know, being in the dumpster for the last number of months. So even though that's 20% of the index, you know, there have been enough of those 3, 4, 5, and 6%ers in the XLK to keep that thing, you know, at a pretty high level. XLC, you know, kind of surprisingly was another one of the indexes that went into state one a day after XLK back in November. And again, XLC is essentially Google and Meta. You know, it's close to 50%. You know, same deal here. We had, you know, a real long state one in XLC recently, but hey, and you got this gap down in XLC on the 25th because that was the day, you know, Meta collapsed. And, but you can see it's held that low. So, I mean, trying to decide whether you're bullish or bearish, depending on what you're trading, I think you got to see whether the recent lows have held. Many of them were April 19th. You know, here's Google. You know, you got the big bounce on earnings. It's coming back, seeing whether it can fill the gap, but a stock that obviously has done very, very well. Meta, you know, same thing. We talked about this, I think, not too long ago. I think that gap is around 405. I'm not sure we've filled it yet, but, you know, that's a big part of this index or ETF as well. Let's see, XLP, excuse me. I pulled this up because, you know, here we are, consumer staples. And when you're talking XLP, you're talking Procter & Gamble at 15%, Costco at 12%, Walmart and Coke at 10%. So you're talking darn near 60% of that index right here. What caught my eyes, you know, here we are in a sell-off in the market, and this thing, you know, rolls into a state one. And many months ago, I remember, you know, we were talking about this thing as a proxy for inflation. And isn't it interesting that these consumer, you know, durables, you know, I'm guessing this just speaks to their pricing power. We're in a state one. If I take this out a little bit further, you'll see this thing has, you know, been at levels like this before, for sure. But here we are in a down market, and this thing's rolling into another state one. I think it bears watching. let's see, I'll try to rip through, energy, as Josh said, getting a little bit of a pullback in oil. That's been, one of the few state ones, in the ETF space. Let's see, SPX, I think I don't need to get into that. Let's see. I think some of my charts turned into SPXs. XLF was a little bit of a disappointment to me. It had been 417 here. Where were we? 3 days there. We had a heck of a state one in XLF. And, it was in state one as of a couple days ago. Let's see. It was, okay, a little later in the party, November 27th. It was November 5th, 6th, and 7th, I think, when we first got our state ones coming out of the October lows. But let's take a look at the current chart in XLF. And just, the financials are always important. A little bit disappointing for me to see that. I mean, we had, a nice state run, even though, not a ton of price appreciation, but, a nice long state one. But here, this thing kind of rolled over into another state too. Whether that's just a hiccup and we're going to be fine, hard to say. But this low level just below 40, I think, bears watching. If the market truly is going to roll over, got to believe it'll be the financials too, and probably one of the important ETFs to keep an eye on. So they were the things I wanted to review today. I do want to, actually, let me back up here a little bit. Sadir, let me just see if I got the right. Okay, so, and I didn't get all these done, but you were talking about those day two transitions and how in mid-April we had 2 days where over the course of 2 days we had 551 state two transitions. Over the course, going back to 2007, that was number 14 in terms of 2-day transitions into state two. But out of 14, there are a bunch of them that kind of pair together. We're only talking 6 or 7 different periods where we had that number of state two transitions. And this one, I think I got 2010 up here, okay? May 5th and 6th of 2010, right here, we had monster state two transitions, 769 of them, okay? So, it's the S&P. We still got, some downward movement inside of those state transitions. Now, this is back in 2010. Next, I go to 2016, June of 2016, right in this period here. It was actually before the spike sell-off. It was, no, I'm wrong. It was right in here, this spike low, where we got, let's see, 2016, bear with me, it was a little over 600 day two transitions, which was about number 4 on the list. And you can see coming out of that, basically the market didn't look back. It's trying to go in chronological order here. Next, we've got 2018, February, right in here, this 6, 7, 8 period. We had, many hundreds of state two transitions. You horsed around a little bit over the next month and a half or so, and then off we went. And I think that's as far as I got. In terms of, let me just, 19, one more, August 5th and 6th. So right in here, August 5th and 6th of 19, massive state two transitions, and basically, you know, off to the races we went until, you know, COVID. So there are a few more of them, but, you know, to your point, a couple of weeks ago, Sudhir, you know, what's the relevance of piling these state two transitions together? You know, it looks like, you know, in most situations, and that it's a pretty good indicator that, you know, those state twos tend to hold when there's so many of them, and off to the races we go. I'll do more work on it between now and next week, but, you know, that's what these and I'm only, you know, taking a look at the S&P inside of that, but I'll follow up on some of that stuff next week, and we'll have the employment number to talk about, and I know we're way past 2:00, so I will be quiet. Happy to take any comments or pass it back to you, Josh.
Okay, yeah, thanks, Joe. Anyone else? Comments, questions before we wrap it up? All right, well, thank you all. We'll do it again next week.
Thanks,
Good
everybody.
charts, Joe. Thanks,
Thanks,
guys.
everybody. Thank you.